By 2035, the global economic landscape is expected to look significantly different from today, shaped by growth rates, demographics, technological innovation, and structural reforms. Current long-term projections suggest that the United States and China will remain the two largest economies, but emerging powers such as India are rapidly gaining ground. The United States, with a nominal GDP exceeding $31 trillion in 2026, could surpass $40 trillion by 2035 if it maintains average annual growth near 2%. Its dominance in technology, capital markets, and high-value services continues to provide structural strength despite slower manufacturing output. Innovation-driven industries remain America's primary economic engine. China, currently the world's second-largest economy at over $20 trillion, could approach or even match the United States in total GDP by 2035 if it sustains average growth between 4% and 5% annually. However, demographic challenges present significant headwinds as China's population has already peaked and is projected to decline steadily through the 2030s. Manufacturing still accounts for nearly 30% of China's GDP, and its share of global manufacturing remains close to 35%. The country is aggressively investing in artificial intelligence, semiconductors, electric vehicles, and advanced robotics to transition from a manufacturing-driven model to an innovation-driven economy. The success of this transition will determine whether China fully closes the gap with the United States. India is widely projected to become the third-largest economy by 2035, potentially exceeding $10 trillion in nominal GDP, with a population that has already surpassed China's and is expected to continue growing until around 2060. India benefits from a strong demographic advantage. Approximately 55% of its GDP comes from services, including IT outsourcing, digital infrastructure, and business technology. However, India's GDP per capita remains relatively low at around $1 per hundred, indicating substantial room for middle-class expansion. If structural reforms and infrastructure investment accelerate, India could emerge as the fastest-growing major economy over the next decade. Germany and Japan are expected to remain among the top 5 economies by 2035, although both face demographic aging and slower growth rates. Germany, with a GDP near $5 trillion, remains Europe's industrial powerhouse and export leader, particularly in automotive engineering and advanced machinery. Japan, with GDP around $4.5 trillion, continues to lead in robotics, precision manufacturing, and high-tech components. However, both economies face population decline, which limits labor force expansion and domestic consumption growth. Their economic strength will increasingly depend on productivity gains and technological leadership rather than demographic expansion. By 2035, global economic dominance is unlikely to belong to a single country. Instead, power may be distributed among multiple economic giants, each leading in different domains. The United States is positioned to dominate innovation and capital markets, China to maintain manufacturing and infrastructure scale, and India to leverage demographics and services growth. Germany and Japan will likely remain advanced industrial leaders. The balance between these economies will shape global trade flows, investment patterns, and geopolitical influence throughout the next decade.